So Berkshire Hathaway, it's an insurance conglomerate, and before you fall asleep, it actually does a lot of other stuff too. So essentially, this company owns a lot of brands that you know about, but that you've never thought were all owned by the same parent company. And essentially, the way it does this is Berkshire, is really focused on insurance, particularly with Geico, which you may have heard of as the low-cost operator in auto insurance. And it takes the money that's thrown off by this and some other businesses to sort of purchase new businesses and also to purchase investments in other businesses from time to time. So Berkshire owns brands that you may have heard of: Dairy Queen, Fruit of the Loom, See's Candy, BNSF, which is the
railroad company,
big railroad company, Berkshire Hathaway Energy, and just a number of different companies. And that it wholly owns. Most recently, Precision Castparts was a stock it picked up. And then it also, Buffett also invests the float from insurance. So that's sort of the money that's been paid in and not yet been paid out in, that's been paid in premiums and not yet been paid out in actual insurance costs, to invest in a number of stocks. And so Buffett owns American Express, Coca-Cola, and IBM, and sort of a lot. Wells Fargo.
You have to mention the bank
of course,
on
the
the
financials.
show.
We must mention Wells Fargo, and sort of a significant percentage of some of these really big companies. Like I think, Berkshire owns over 9% of Coca-Cola. So really, really big stocks. Buffett and his vice chairman Munger, Charlie Munger, are known for pithy commentary and just this sort of like long-term focus on investing, and they're really value investors.
They're also very Midwestern.
Yes. In what way?
They're very Midwestern in that they are plain folk.
Oh yes, very.
Who have a wily intelligence hidden behind a folksy demeanor.
I would say those are all very accurate. If you want to see a really well thought out investing philosophy, read Warren Buffett's annual letter to Berkshire shareholders. It's available on the Berkshire Hathaway website.
And they actually have compilations of it on Amazon that you can find for cheap. It's a really good resource if you're just starting out investing. And a lot of his philosophy mirrors the Motley Fool's, or perhaps we mirror his. He
came first, so okay. We mirror his.
This is not a chicken and the egg debate. The chicken definitely came first.
Yeah, Buffett's been chairman of Berkshire Hathaway since 1965, or CEO since 1965. So he's been around in this business for a long time. And one of the fascinating things about Berkshire Hathaway is that so within investing, people often talk about how difficult it is to pick stocks, how difficult it is to grow things faster than the market, unless you're day trading. And what Warren Buffett has done with Berkshire Hathaway is he's grown the book value of the company by over 19% a year. And so it's just been this tremendous...
Which is incredible. Again, if you are a new investor, the average growth for a company is not around 20%.
Right. The S&P grows by 7 to 10% annually, historically, on average. So it's just been this tremendous growth story, and he's really showed that by picking great businesses and picking great stocks, you can deliver outsized returns if you invest for the long term. So he is just sort of... he was described by one shareholder as Dumbledore in a shareholder question, and there were a few groans in the room, but it's very true that he is kind of the dean of long-term investors these days. Originally trained influenced heavily by Ben Graham, who's kind of the father of modern value investing, and he's changed over a little bit to not just become sort of a strict value investor, but to also think about really good management and to be willing to even pay up a little bit for good management, like he did with Precision Castparts, which is the most recent major Berkshire Hathaway purchase.